All right, welcome to the Hudson Board of Trade. We had our second trade off. It ended December 13th. What we do is we watch Maria Bartiromo's Wall Street Week. She has an earning calendar in the last 10 minutes of her show, and I make up bets that you can use to start learning how to be a market maker. And the advantage of being a market maker is that it's an easy way to understand trading and at this school, options trading. So a typical student is someone that's really interested in the market, someone that's interested in gambling, someone that's maybe in college learning to be an entrepreneur or studying finance, anyone that's taking a Series 7. I do believe that trading in the future is going to be part of the gig economy, and you can do it from your phone. And you can just play small bets, a few a year, a few a week. It doesn't have to be a full-time job. So I'm just teaching people what I learned to do on the trading floor. And I'm trying to make a game that people can learn how to trade. So my first game is the Wall Street Week game. We use the earnings calendar that she puts out each week, and we trade earnings. So the first stock that we had was Toll Brothers. This week's was between USA-1 and FBI-1, okay? They both wanted to sell Toll Brothers. It was a $2.25 straddle, and at the beginning of the week, Toll Brothers was trading $41. At the end of the week, it only moved to $39.73. So they got $2.25 when they sold the straddle, and it only moved to $1.27, so they made 98 cents a share, and I allowed them, with risk management, I thought 100 shares was the appropriate amount. So they did 100 times. That's why they're up both $98. The next bet that we placed from Wall Street Week was AutoZone. This is a $1,172 stock at the time on Monday, and the straddle was worth $60. So I only let these guys trade a 10 lot in the game, right? So USA-1 bought 10, and FBI-1 sold 10. And then it ended up moving $62.82. So that's $2.80 profit for USA-1, 282 times 10, and it was a 28.20 loss for FBI-1. The next trade we did was Play Dave & Buster's. It was a $40 stock on Monday, and you got $4.25 to sell the straddle. And it only moved to $39.41 on Friday. So it didn't move that much. It only moved 59 cents. So since they both sold it, they made $366 because I let them do it 100 times each. So $3.66 a share times 100 is $366. The next stock that we did was GameStop. It was a $6.50 stock at the beginning of the week, and the straddle was worth $1. So USA-1 bought it. I allowed him to buy it 1,000 times, and FBI-1, I allowed him to sell it 1,000 times. This was their opinions on it. I didn't tell them what to do. I just gave them the straddle price. And it ended up moving $1.05. So 5 cents times 1,000 is a $50 winner for USA-1, and it's a $50 loser for FBI-1. Now TLT, we try to trade the bonds, and when we trade the bonds, we look to TLT to do it. At the beginning of the week, it was $138.50, and it had a $2.25 straddle. FBI-1 sold it 100 times, and coincidence, USA-1 bought it 100 times, and it was better to sell it because by the end of the week, TLT was trading $139.04. That's only a 54-cent move, so that was a $170 winner. 54 cents minus 225 gets you to $1.71. And since they did it 100 times, it's a $171 winner for FBI-1, and it's a $171 loser for USA-1. What I'm trying to do as a market maker on the floor, you have to know where the straddle is, right? And you can tell if it's a high vol or low vol by the straddle price. And then since we're doing this on earnings, they all have the event of earnings this week. So we're seeing what market makers think the expected move in the stock is going to be. So AEO, it's Abercrombie, or American Eagle Outfitters, I'm sorry. It was a $15 stock. and it had a $1.25 straddle. I let them do this 500 times. They both decided to sell it, and it only moved 54 cents also. So they got a $1.25 when they sold it a share. They only had to pay out 54 cents, so they made 71 cents 500 times. That's how we got the $355 plus for both. Costco was $295 on Monday, and on Friday, it only moved to $291.87. That's a $3.13 move, and you collected $10.50 when you sold the straddle. So USA-1 bought it, so he was down $737, but FBI-1 sold it, so he was up $337. AVGO is Broadcom. That was a $315 stock on Monday with earnings. The straddle, the earnings straddle was worth $16. The stock only moved 42 cents. So you collected $16 a share when you sold the straddle. You had to pay out 42 cents on the move. So if you sold the straddle, you collected $15.58. I allowed both of my students to do it 100 times. So they were both up $1,558. Then finally we had Adobe. Adobe was a $305 stock at the beginning of the week, and the straddles were $12. FBI-1 sold it, USA-1 bought it, and it ended up moving $12.94. So that 94 cents, and I let them do it 100 times each, was a $94 winner for USA-1 and a $94 loser for FBI-1. So by the end of the week, when I tallied up all the trades I allowed them to do, FBI-1 was $1,641.21 up, and USA-1 was that, and FBI-1 was up $3,112.80. So FBI-1 is the winner this week. Good job. And so what I'm trying to do is I'm trying to make fantasy sports, add that into trading. I think with repetitions, if you practice this, you'll start understanding market making. The value of understanding market making is that you will understand trading and options trading at this school. So if you like what we're doing, if you want to start playing this game, for $10 you get 1,000 shares, and for $15 a month you can play the Wall Street Week game. There's going to be more games coming out, like Options Action and off other TV shows. So this is a great way to learn how to trade. It's all about getting repetitions. Repetitions equal mastery. And please think of becoming a member of the Hudson Board of Trade. Thumbs up the videos, subscribe to the YouTube channel, and think of being a member of the Hudson Board of Trade. Thank you.